An absolutely perfect, picture-perfect bounce today off the 200-day SMA, just like we talked about. I'm not bragging. I've been wrong countless times, but we got one right today. At least we'll see how this ages. But right now, we're holding the 200-day SMA absolutely perfectly. If we were to repeat history, which, of course, no guarantee that the history is going to repeat, but if we were to, based on the last data point here, we would be going up and setting up for a nice 100% run in the span of less than 1 month. Okay, am I saying that's going to happen? Of course not, but it's something to know. I want to go over the news today. We've got this piece of news right here, not groundbreaking at all, but it's proof of concept. And Simon Barnett, this piece of news, up one point of this directly contrasts and contradicts what Simon Barnett is saying, right? So I want to go over why Simon Barnett is an idiot. All right, no disrespect to him, but we also want to go over the actual the dollar amount that we actually made today, or whenever they actually paid us, right? But you know, today we found out that there was 40 subjects being used. I want to talk about how much money that is. Case spoiler alert right there if you want to see it. Anyways, also upcoming events, Cancer Genomics Consortium. That's coming up August 1st to 4th. Okay, boom. It can't hurt us. It's only going to be good things. It's only going to be marketing, more exposure, more knowledge of the Saphyr and why it's the best at what it does in the literal world. All right, general manager listing. This is 1 day ago. This is a new one. And if we look right here, Salt Lake City, Utah, you're looking at a Lineagen general manager. Now, if we go down to the responsibilities, that's where it gets really interesting. And I'm very excited as to what that kind of plan right there, spoiler alert, is going to do for our long-term revenue, especially the compound annual growth rate for the Lineagen revenue, and they are a subsidiary of Bionano. Also, the short interest data, some technical analysis, of course, and my portfolio reveal and showcase. You may be familiar with the fact that I say all the time Bionano is cost-effective and cheaper and better overall than any other method in the world at greater than 500 base pair detection. Structural variance. This is saying we have a lower cost per sample, and I love it because I already knew we were cost-effective because the company says it every second, and studies, publications, PhDs, scientists, doctors, literally hundreds of publications have verified this, and we see another one today. And I like this because I haven't actually seen this metric used or this jargon used, lower cost per sample. Simon Barnett, you may be remembering a battle between me and him on Twitter. He was talking about the cost per sample maybe not being in Bionano's favor. He wasn't very explicit with it, though. And this study right here maybe explains why. Because in actuality, we're cheaper per sample, per genome, per overall any metric, right? Simple as it gets. We're just better than anything else in the world. And it's for the reason of no one else can do what we do because we have nanochannels. No one else in the world has figured out how to implement that technology, and no one is even close, right? According to our CEO, NABSES is the closest, and they're decades away. Okay, I mean, so that is amazing. I mean, is there any other groundbreaking news in here? Not really. I would say this isn't even groundbreaking necessarily, but it's more proof of concept, more proof that Saphyr's better. And it's very simple. I'm not going to read this whole thing to you. You can go watch Richard Allen. No disrespect to him. If you want to see the whole article read through, you people can read it yourself. It's good news. That's for sure. Now this right here. So if you basically multiply the cost per genome average, right, 450 to 550, take the average of that 500 times 40, which is basically, and that's the per genome fee that you have to pay Bionano if you're using the Saphyr, to my understanding at least, right? So 40 subjects, so they're doing a ton of samples and they're doing at least 40 human genomes. So you do that math, $20,000. That's my basic rough math as to what we're kind of getting from just this one study, right? So that kind of gives some perspective. Are we getting one of these every day? No, of course not. But guess what? There are studies and samples and volume happening behind the scenes left and right? It's not like they're going to tweet out every single time the Saphyr is used. No, not even close. And this just gives you an idea of what we're making and why that consumable revenue is only going to increase every single year. And regardless of if this CAGR is a little bit lower or higher for the Saphyrs installed, it's only going to go up. And that's a fact, all right? I mean, if the units installed go up, the total consumable revenue will increase, and that's what makes it so auspicious to be a long-term hodler. There's not much to worry about as far as if this company will be profitable and making millions somewhere down the line, whether that's 10 years, 15 or 7 or 8 or even less than that, right? Nano also comes out commercially, okay, 2023, 2025, here we come. Profitability next year, 2023 latest, right? Simple as it gets. Next up, I want to go over the events. So there's nothing to go over here, right? Cancer Genomics Consortium, it's going to be good. That's coming up. I want that to be on your radar, right? Another upcoming catalyst, potentially, right? Potentially. You never know if the stock's going to react to anything. Typically, good news just sends us lower, and no news sends us higher, right? So, but also, this is what I'm actually most excited about today. So this is the general manager at Salt Lake City, Utah. This is Lineagen. This is the general manager for our subsidiary. We acquired them last year in August. Now, if you go down to the responsibilities, this is where it gets extremely interesting, in my opinion. Ensure the creation and implementation of a strategy designed to grow the business. Now, one thing, and you may be wondering, Brandon, what are you going on about today? This is nothing. Well, I am excited because I don't think Lineagen Expansion is not something that we have priced into the current stock price, or even the bulls like I am, like bullish bulls like I am, and like some of you. We don't even consider the fact that Lineagen may grow, and this CAGR of 40% may be more like 50 or 60%. If it were bull case, right? I don't know how much of a chance it is, just because we're getting a job listing that has a responsibility of business growth plans in the responsibility for Lineagen. That doesn't necessarily mean the revenue they're going to get is going to be higher, right? That's a fallacy composition. If you would say it would. If you say that is going to cause that for sure, no. What I will say is that there's a chance that maybe we're underestimating the fact that Lineagen may expand a little bit. Bull case, let's say they do. This is going to be a great thing that's going to compensate and make profitability, not only in quarter two, but not really quarter two. Right, projections like this make the base case more like the bear case. And make a new bull case that's even more bullish, right? And it's going to really bump up the path to profitability and expedite that process. It's going to make 2022 quarter four nearly for sure going to be profitable if Lineagen were to get a significantly higher CAGR, being 5%, 10%, 15%. That's the stuff that's going to send us to the moon long term. And these are the things that you have to be aware of that are happening behind the scenes that most people don't have a clue about. I mean, they have no idea what's going on, that we have been hiring a ton of people. And if you look at the headcount growth over the last 6 months, you can see it's a 36% headcount growth, right, in the green increase. So they're hiring, and we've got proof of business expansion. That there's no debating that. Now, the responsibilities is where it gets interesting. So for me, I think this is definitely something to put on your radar. The fact that Lineagen may just be growing more than we actually think it is, and if it is, okay, profitable. I think it's pretty safe to say profitable in 2023, if not before then. Very likely to happen in 2023 if Lineagen were to start trying to expand their business. Because if they're going to put a lot of effort into it, I know that they see a realistic opportunity of increasing these numbers here, essentially. Because at the end of the day, you don't expand your business if you're not trying to make more money. One way or another, down the line, short term, whatever it is, that's what they're doing. Business expansion means they're more confident. There's more work to be done. They need more people to get that work done. Therefore, they're expecting more sales, or they already have more sales, right? Or, something of that nature, right? Business expansion, as a shareholder of the company, this is exactly what you want. You want them to be hiring smartly. You want them to have stuff like business growth plans, like this responsibility. So I like to see it. I'll leave you with that for that. So short interest as well. You're looking at 20%, and I'll just highlight this fact. If we were to get a great catalyst in the form of, quarter two earnings beat, right? Squeeze time case right here, 6 million, right? I don't know if that's likely, Kate. I don't think it's very likely. I'll just say that if we were to get something like this, base case 4 million, bull case 4.4, that is the catalyst that we would need for some shorts to inevitably cover. And the fact, for one reason or another, whatever your opinion is, right? The fact is some shorts are going to cover 100%, some of them. If some of them are going to cut, here, just put it this way so you don't take me out of context. Please don't take me out of context. I'm not saying a short squeeze is imminent, but the fact is some shorts will cover if the earnings is going to kick ass. There's no doubt in my mind. And the reason is because many of them are shorting this company precisely because of the bad revenue numbers, in their opinion. Once they start seeing we got 300% year-over-year growth, 200% whatever it is, right? According to ChartMill, that's what the expected consensus is. It's over. They're going to cover, and we're going to see a little bit of a squeeze happen. Is it going to be a true short squeeze where we go up 50% a day? I don't know, but there's going to be shorts covering, and this is why we cover the short interest data every day. Because as long as this number remains high and higher or really close to AMC, I believe I haven't checked AMCs in a while, but very close to AMC or way higher. This is something that we cannot neglect. It's not a negligible stat. It's a very important stat. So that is, technically speaking, if we are going to get a catalyst in the form of high growth going way up, or quarter two earnings, or nano commercial release, whatever, it's the Lineagen expansion, it's great to see. Now, quarter two earnings is mid-August, so just know about that. I'm sure you know about that. Everybody and their dog knows that, right, at this point. That's the expected date. Also, price action. We bounced off the 200-day SMA picture perfectly today, right? Absolutely. On the daily, in the pre-market, we were down at 539. 551 is the day's low on the daily chart here, and in the normal market hours, and that is exactly That is, I repeat, that is literally exactly where the moving average was. Now it's at 552, but it was at 551 earlier today. We got a perfect, I mean, it doesn't get any more picture perfect than that. That's as simple as it gets. Last time, as I said, we went up 100% a month. Maybe we're about to get the same thing. We have a little bit of a bullish engulfing candle here. I want to go in the 30-minute chart, though, and show you what I'm seeing as far as resistance. Make sure you ignore these other two lines here, but what I want you to focus on is this one right here. Right, this line, this descending level resistance right here, this has been validated a few times. So you got a couple touch points, right? You got one right here, two right there, 3, 4, 5-ish, right? So this level needs to be broken before we start really, start ramping it up. Because right now we got rejected two out of 3 trading days in a row. And if we can open up green tomorrow, that's going to be an amazing start for that. Also, I want to look at the daily stochastic indicator on the RSI. So basically, you had your buy signals a couple days ago. You had your buy signals, and even today, really, in the pre-market, you had your buy signals. Personally, yes, I did add shares, and right now you're getting the bullish flip on the bullish crossover on the stochastic indicator. That's a buy signal as well, and we're still in oversold territory on the stochastic indicator. RSI, you're pretty close. So, is this the time to buy? Some people think that, in order to beat the shorts, we need to hold and then buy at one point. That's a fine strategy. I think that could work. But the fact is, this, for me, with a company like this, it's my opinion that you just want to accumulate as much as you can while we're going down. Okay, it doesn't have to be perfect. You're not going to get it perfect. Good luck timing it perfectly. It's impossible. Just get as many shares as you can when you think you're pretty low to the bottom or at the bottom, right? So for me, I added 15 shares today in the pre-market. We were down like 6% or 5% at 541. I'll show you the order here at the end. But for me, that's what it comes down to. Now, I don't want to say we're in super bullish territory now, because the fact is we still are below a decent level of resistance that we validated today, along with being in bearish territory in the short term to mid-term. And that is represented to me by the 21-day simple moving average, otherwise known as that middle bullish band. We're below it. On most major mid-term to short-term indicators, like the Supertrend SAR on the daily, you're bearish. On the 4-hourly, you're bearish on most of them, right? The SAR, you did get the flip. That's the first sign of a reversal, but we've seen several false signals during this downturn. We've seen 2 false signals on the Supertrend before. And the SAR just flipped, and now we need the Supertrend to flip. Then we need the daily to flip, and then that's when we can start getting into higher highs, higher lows, maybe a test of 912, maybe a pre-anticipatory run up to earnings if high growth permits us to do that. That's what we need. So I would look in these next few days. Here's what I would look for. Okay, if we're gonna dip, this is what I would look for: 200-day SMA. Right, we bounced off that amazingly the first time. Right, today. And if that's the immediate next level of support. If we were to break the 200-day SMA, obviously 550 is going to be a natural buy wall, but I'm also seeing a couple support levels right here. I'll go ahead and draw it up for you. So basically, I'm seeing this is a natural level that the price action has respected a few times, right in this 550 or 540 to 530 area. You can see we've got a couple we got perfect support right there, down about 510. And then we've got a nice rejection, and actually that's not a rejection. That's a confirmation of the support at about 550 or high 540s. So anywhere in the 547 to 518 range, 5 to 550, you got a ton of support in there. So if we do dip down there, yeah, you better bet your ass I'm adding shares. And I think it's unlikely, in my opinion. I think it's unlikely that we break. I think it's unlikely that we break the 200-day SMA, to be honest with you, but I think it's even more unlikely that we break this level that we just have drawn up right here. And I will leave you with that for the technicals today. Anyways, there's the portfolio, and here's my order that I did add 15 shares today right there at 541, 15 shares. Very glad I did. Very regretful that I didn't add more. Anyways, with that being said, thank you all so much. This is not financial advice. I will see you all in the next one.